One of the biggest misconceptions is that you can only have one VA loan at a time. Well, today I'm going to debunk that myth, and I'm going to share with you examples of bonus entitlement, examples of when individuals can have multiple VA loans at one time. My name's Aaron Benton. I've been a mortgage loan originator since 2018. I'm conveniently located in Bluffton, South Carolina, about 40 minutes south of Parris Island Marine Base and about 45 minutes northeast of Hunter Airfield in Savannah, Georgia. So we're going to talk about bonus entitlement today, so that the idea of having multiple VA loans is not a crutch for you. It's something we can certainly do. There is a strategy and structure that you gotta keep in mind. So stick around, because I'm going to show you just how we do it right now. Option we're actually going to talk about is if you actually don't need to use the VA bonus entitlement. So if you are applying for a VA loan and it's your first time, the idea of carrying multiple VA loans and the idea of bonus entitlement is not relevant, because the VA will allow you to have 100% financing on any kind of loan amount. In Beaufort County, South Carolina, $832,750 in 2026, $832,750 is the max conforming loan limit. That is considered a VA standard loan. If you go above that, it's considered a VA high balance loan. If you are buying a property utilizing VA financing for the first time, it doesn't matter whether you have a normal VA loan or a high balance loan. You can get 100% financing, and you don't have to worry about VA bonus entitlement. Bonus entitlement is when you want to have multiple VA properties at once. So what I'm going to do today is I'm going to show you some of these examples. And the first example that we're going to look at is it's going to be based on the COE, the Certificate of Eligibility. So every single individual active military veteran, you receive this Certificate of Eligibility, and it lays out kind of your years of service, some of the information I've redacted here for this purpose. But you can see in this example, Virgin Islands, this individual had a loan amount of $215,000 and they bought the house in 2022, and this is their entitlement charge. So they already own one property, and you can see that it is active, and they're coming to me as the lender, and they're looking for, well, how much can I buy for 100% financing? What does that look like? Well, there is a very handy tool that we can utilize, where what we can do is we can just simply punch in your entitlement, and you can see here it is going to be $53,750. So I'm going to put in $53,750 into my example, and you can tell this is already pre-worked. So what that means is that the purchase price of $617,750 is the max purchase price where you can receive 100% financing. And the beauty of this is, if I were to change the $617,750 to $617,850, you would recognize, because I went above that threshold of $617,750 for you to get 100% financing, you had to put down a down payment, in which case this shows you. So their Certificate of Eligibility is the first step in being very, very powerful to helping you. So it all starts with the Certificate of Eligibility. So whether you're active military or you are retired military, you're getting a Certificate of Eligibility, which is going to show the entitlement that you've used. So here in the first example, I have a Certificate of Eligibility. Play this out. The individual they have an active home in the Virgin Islands. The first loan that they had was $215,000, and they used an entitlement of $53,750. So what I'm going to show you is this VA entitlement calculator, in which case, how do we see how much of a loan can we get for 100% financing? And if we break that threshold, how much do we have to put down? So in this first example, you might recall the entitlement used was $53,750. I'm using it right there, $53,750. So I'm going to punch that right into my entitlement used, and then in this example, I'm then going to show you just how much of a house you need in order to get, or what is that max purchase price rather, to get 100% financing. So the math is actually kind of simple, believe it or not. What I do is I take the conforming loan limit of $832,750, and I'm going to subtract away that $215,000 because that is the loan amount that has already been used. Again, this is a little simplified, but you give a local lender a phone call, you hand over their certificate of eligibility, and you'll be able to get the exact information you need. So pretty simplified at the moment, but a great start. So what we do is we took the loan limit of $832,750, I subtracted away the $215,000. And what happens is I'm going to guess, or I'm going to wager, very educated at that $617,750 is the max loan amount that I can get, and in order to have 100% financing. So notice, you didn't have to sell the house in the Virgin Islands. Rather, what you did was kept it, and you recognize that $617,750 is the maximum amount that you can purchase and still get 100% financing. Understand that as the conforming loan limit changes, so say in 2027 the loan limits change and they go greater than $832,750, then this calculation is going to change because it's all based on the conforming loan limit. And look here what happens. Let's just say, for example, I change the $617,750 to $617,850. That happens to be the house I want. Well, look at that. You got to bring $25 to closing. So not so bad. Understand, when you go over that guarantee amount, you have to bring a quarter, like literally 25 cents for every dollar that you go above your guarantee amount. So in that example, when I showed you $617,750, notice I went up $100 to $617,850. You have to bring a quarter for every dollar. That's $25. So a really powerful tool. Now I'm going to show you another example. And another example I have is I'm just going to stack these up. So let's just play this one out. You had your first loan in the Virgin Islands of $215,000. It carried an entitlement of $53,750. Then you got transferred. Maybe it was orders, or maybe you decided to move, and now you're carrying another piece of property in Maryland. And as you can see, it was about a year and a half later, and that loan amount was $240,52. And again, that carried entitlement of $60,013. So what we're going to do in this example is we're going to punch that into our calculator here. So pull this up, and I'm gonna look at the 215 plus the 240,050. That is going to be a total loan amount of $455,052. If I'm talking about entitlement, I'm going to add the $53,750 and the $60,013. If I add those two together, my entitlement is $113,763. Well, what that means is I'm gonna use that arithmetic that I was using before, and I'm gonna take my $832,750 and I'm gonna subtract away the loan that I've had up until this point. So I'm gonna subtract away $215,000 and $240,052, and that number is $455,052. And I'm gonna make a very educated guess that my max purchase price is $377,698, and I get to have a down payment of $0. So that would be the max loan amount that I get in order to attain 100% financing. So check this out. Just like I did before, I'm going to change this $698 to $798, and you can see you got to bring $25 to closing. Now let's play this out. Let's just say hypothetically, well, gee, I was actually looking for a property that was $650,000. Well, if you wanted to buy $650,000 and you had already had that entitlement used in the Virgin Islands or in Maryland or whatever your situation shows itself, you can recognize that you have to have a down payment of $68,075. So yes, you can use bonus entitlement. This becomes the piece where sometimes, even though people are eligible for VA loans, they start to slide to a conventional loan because of the down payment. So on conventional financing, if you are a repeat buyer, you could put down 5% as the minimum. You can understand that 5% of $650 is less than $68,000. Now the VA is most likely going to have a better interest rate. It's not going to have mortgage insurance. So there's still a lot of pros to utilizing the VA loan. But if it is solely based on down payment, then you might opt to use a conventional loan at 5% down. And if the loan limit allows you, maybe you use an FHA loan at 3.5% down. So just something or food for thought as you start to think, what am I going to use? If you liked what I just had to say, subscribe below, tap the bell for notifications. I'd love to understand your situation, especially as it pertains to this bonus entitlement. As you can tell, very, very powerful tool. I'm going to dive in. I'm going to give you a third example here. So my third example is one that I sometimes see. I think this actually will trip up other lenders, and really here what you have is you have a paid in full and no restoration, and then you also have an active loan. So that paid in full, that is a loan. So the individual had a VA loan, they closed, meaning they sold their house. The loan was paid in full, but the lender never submitted the necessary paperwork to the VA to show that, hey, that restoration is there. So this comes up a lot of times because in this individual situation, if I were to take their $36,000 from the first and the $120,000 entitlement, it would really handicap their ability to be able to purchase a third home utilizing VA financing. Well, good news. If you came to me and I saw this certificate of eligibility, I wouldn't say, hey, I'm stuck. I would simply ask for your deed or the closing disclosure that is linked to you selling that home, in this example back in 2015. So there are ways around being able to restore that entitlement well after the fact. So in this third example, I'm just going to walk you through, we'll do it all over again, but recognize the purpose of this example is really, hey, if your certificate of eligibility shows that, hey, it was paid in full, meaning you sold the property and no restoration, it's not your fault. It's just that the lender who held your previous loan never went to the VA and basically closed that out. So it can rear its head here when you want to buy another utilize VA financing again and utilize that bonus entitlement, but it can easily be cured. So doing our third example, you're going to be pros by the time it's all over for sure. And in this example, my third example, I'm going to punch in here my $120,000 VA entitlement. This is what I've used so far. And as you can recognize through the certificate of eligibility by now, that is $480,000. So I'm going to take my very, very educated guess, and I'm going to say $832,750 minus the $480 that's already been utilized. I'm going to wager to you that this person could buy a house for $352,750 and get 100% financing. And look at that, 100% financing. Check it out. If I slide just above $100, they got to bring $25 to closing because I'm $100 above the guarantee. And when you go above the guarantee, you have to bring a quarter, 25 cents for every single dollar that you go above the guarantee. My name is Aaron Benton. I'm host of this channel and a local mortgage lender. I would love to understand your situation. I think that the VA bonus entitlement is something that can really, really be utilized. There is no limit to the number of VA loans that you have. It is all based on your entitlement. Of course, in the military, you get orders, you get transfers, and you want to find housing. So you can utilize that VA loan multiple times. If that's something that you enjoyed, subscribe below, tap that bell for notification, even type the word VA entitlement inside my comments. I'll make sure to connect with you so that I understand your scenario. I hope to one day get to meet you, but if not, I hope to at least see you on the next video.